We all like when our portfolios, our stocks go up, we feel very good about ourselves and we get the shot of dopamine when that happens. However, when we lose money and our stocks go down, it is so much more painful than it is pleasurable when we make money. If you're new to this channel, my name is Mariusz Konieczny. I run Microcap Explosions, a website dedicated to microcap stocks which are ignored and underfollowed by the investment industry. I also wrote about 10 books on investing, one of which is available for a free download at microcapexplosions.com. I also created valueinvestinguniversity.com, which is a free, not a paid resource to make you a more intelligent investor. I've heard this so many times that the amount of pain that we experience when we lose money is so much greater than the amount of pleasure that we get when we are making money. And that's why, markets operate the way they operate. And of course, now with a recession being in constant talks, interest rates going up, the stocks are selling off, and we are all experiencing a tremendous amount of pain. And all of us are experiencing pain. Now, some of us deal with this pain differently, but we are all experiencing pain. And you see, it has a lot to do with, how we see things in life. Like, you see, think about situations like when we grow up. When we grow up, we go to school, we progress somewhere, and we work towards a certain goal, right? And when we are at a particular job, we want to move up within the company and we want to, get a better position, get promoted. And we are not conditioned for going backwards in anything. If you have a job, you get demoted, then that's very painful. Getting demoted is more painful than the pleasure of getting promoted, because when we get promoted or when we make money and we get to the next level, then we get used to that new level. That becomes the new norm. And then in order for us to be happy again, we have to go to the next level, and then we get used to this again. Now, on the way down, it's extremely painful. And I see this in so many areas in life. In addition to, the stock market, or in addition to your job, some of you know that I am a competitive ballroom dancer. And I've seen this for so many years. I've been in a competitive ballroom dance industry for like 25 years or something like that. And I see this all the time, that competitive couples, they dance and they want to obviously move up in ranks. So they compete against certain other couples, right? In a particular time frame, they all see the same couples. And so let's say they have a particular placement among those couples. The moment somebody else from behind beats them, it's like Armageddon. Like, I've seen couples split up just because somebody from behind them beat them. It's so psychological to go backwards. Like, our minds are not conditioned to go backwards in anything. And again, you see this in sports. You play soccer, and let's say you're in the first 11 and you're on the squad, and then you are put on the bench. It's demoralizing to everybody that has to go through this. And you see this over and over and over in sports. And in the stock market, it's no different. Like, when you start losing money on your positions, it becomes so painful, then you tell yourself, because you are paying attention to Mr. Market, you tell yourself that something is wrong with your companies just because the stock price is going down. And this happens to everybody. This happens to smart people, dumb people. Like, the magnitude of pain when you're losing money is so much greater than the pleasure when you're making money. So it's really helpful if you understand this, because the stock market is not a place where the market should make you happy and the market should provide you with the dopamine. The stock market is a place where you can build wealth over time. And it's good to realize that it's not about pleasure or pain. It's about getting more back than what you are paying for. Whether you're a value investor and whether you're buying $1 worth of value for 50 cents, like as is, or whether you're buying future value. It's all about that. And there will be periods of volatility on the way up. There will be periods of volatility on the way down. You cannot change that. No matter how smart you get, no matter what tools you use, no matter how good you are at macro, you can never escape the pain. So the best way to deal with this is to realize that the pain is part of the game, and that the pain is more intense than the pleasure when things go well. So condition your brain to this, that pain is part of the game, and don't think that you're not going to feel that pain. You're going to feel that pain. The determining factor whether you will be successful or not is how you deal with pain and how you behave when you experience that pain. That's the difference. And it has more to do with the psychology than with your high IQ. There's plenty of smart people out there that can analyze the companies in and out. Plenty of people. But very rarely do those people become hugely successful in the stock market. It's the people that can manage their emotions. It's the people that can take the pain. And like I said, not that they don't experience the pain. They do experience the pain. The differentiator is what do they do about it and how they manage it. So anyway, that's it for this video. I hope it was helpful, and thanks for watching.